Welcome to Brief Briefing. Today we see Bitcoin standing on $39,438 and it's gone down by 1.61%. Ethereum currently sitting at $1,314. That's 9% movement up. That is incredible. Last year, Ethereum saw around 7 to 800% increase in value. XRP still around 2.65, just up. Wow. If anyone does not know, XRP was sued by a branch of government and it is not looking good. Today, synthetics price soars 100% in December. What's driving the rally for synthetics? For those that do not know, synthetics is a derivatives synthetics exchange market. Basically, they make virtual representations of like the Nikkei or FTSE, for example. Synthetics, the network token, the native token of Synthetics, a decentralized finance derivatives protocol, has been surging through the past week and is now worth over 7.87. Wow, as of December 23rd. That was quite a while ago. This article's looking old. Synthetics is up past $10 currently. But I really enjoyed this article. The primary catalyst behind SNX has been a listing on Coinbase. On December 16, Coinbase officially announced the listing of the AVE protocol token, Bancor token, and the Synthetics network tokens. Other factors include the rapid increase in total value locked and user interface improvements via its latest software upgrade on December 22nd. Why is Synthetics seeing a massive increase in user activity? Synthetics is a protocol that mints new synthetic assets with cryptocurrencies such as Ether as collateral. This allows users to borrow and trade various assets with many cryptocurrencies on a DeFi derivatives platform. Also, a lot of different applications have been using Synthetics as their base layer, which has increased demand for the token, since you need the token to mint SUSD. Staking is another feature that is likely attracting users due to its relatively high annualized percentage yield based on the protocol's cash flow mechanisms. Essentially, the fees that occur from trading on Synthetics are collected and distributed pro rata to SNX holders. The combination of a spike in interest in Synthetics from Coinbase listing and the platform's overall rise in user activity likely triggered the 100% rally since late November. Wow, that is looking good. Another interesting protocol is called Curve. Curve, what it does is creates pools that keep the stablecoin pegged. Stablecoins have a problem maintaining their one-to-one ratio, and Curve Finance seeks to solve that. Decentralized stablecoin exchange Curve Finance has added the euro as a secondary currency option following demand from users. As announced in a tweet on Sunday, Curve now has a liquidity pool for switching between the state's Stasis Euro stablecoin and a synthetic euro SEUR on the synthetics derivatives platform. Those are likely two different euro representations in protocol form. Currently, the stablecoin market is dominated by currencies pegged to the US dollar. Dollar meaning that European and Asian users often have no option but to take on some US dollar exposure, whether they wish to or not. Curve hopes that the new pool will develop euro markets on the platform, gauge interest in further currency options on Ethereum, and ultimately represent a step towards Curve opening foreign exchange markets. Wow, now you will be seeing the first foreign exchange market on Ethereum. A governance proposal has been passed to enable Curve DAO tokens, CRV, rewards for liquidity providers in the pool. However, this did not seem to have been enacted at the time of press. Now, it's very interesting technology, but I would never even touch Curve. Curve is constantly printing, and its token loses value very rapidly. It is it will just go down. It's hopefully someday the tokenomics will improve, but that is not good. But one of the main reasons synthetics has been going up in value is optimism. Layer 2 Ethereum scaling solution trial set to go live in 2 weeks. A trial run of Optimism's mainnet is expected to debut on Synthetics by January 15th, 2021. Optimism is a firm that is building a layer 2 scaling solution for the Ethereum network. Says that the solution's the mainnet should be available by January 15th. The Optimism mainnet's first trial run will be held in conjunction with decentralized exchange protocol Synthetics. The solution aims to solve Ethereum scaling problems by forming a channel in which transactions can run more quickly and at a lower cost. Currently, Ethereum runs about 1.2 million transactions per day. The average transaction fee is a whopping $15. No, it is not. The average transaction fee is much higher, 30, 40, depending on what you're using. Until we relinquish those keys, please do not consider this the full and final system. Optimism Rollup is a very interesting protocol, but it's very centralized, so they will likely use it until Ethereum 2.0 launches. The Optimism mainnet's first trial run will be held in conjunction with decentralized exchange protocol Synthetics. During the trial period, it will be possible for Synthetics to transform Ethereum smart contracts onto the optimistic virtual machine. Once transformed to the OVM, it will then be deployed on Optimism's mainnet. Additionally, the block reported that OVM is almost fully compatible with the Ethereum virtual machine, which means that Synthetics will not have to change its code in order to deploy its smart contracts onto the Optimism virtual machine. It's looking good, making it easy. Copy and paste the code, get things going. However, because the current run of project is a trial, the Optimism team is expected expecting bumps in the road. The project team will be upgrade keys for at least the first 6 months to ensure user funds and safety. Optimism said in a statement, therefore, until we relinquish those keys, please do not consider this the full and final system. Seems like the testnet is in full swing. I've tested it out and it's very good system. The fees are zero. It's very quick too. Those who have not heard, there is a new market called OPYN. Currently, they're on the live mainnet version 2. OPYN, the decentralized options trading protocol, has announced the launch of their V2 product. The team is calling it the most powerful and capital efficient options protocol on Ethereum. That is quite a statement. It's the moment we've all been waiting for. OPYN V2 live on mainnet. Head on over to opyn.co to try it out. Wow, they've launched. Since its initial release in February 2020, the options protocol has managed to process over 105 million of cumulative national volume. At this time, users can trade only ETH, USDC options on OPYN V2. The version 2 release features an update to the protocol's UI and introduces the new Gamma protocol. According to the OPYN team, Gamma protocol sets the foundation for capital efficient options, starting with spreads. The update also enables auto exercise for in the money options, so option holders don't need to take action before or at expiration. The protocol is also making a structural change and adopting cash settle European options. You can get your money, go get what you need over at wherever you want in real life. This is good. The change to European style options will mean that option holders can only exercise upon expiry. Cash settlement means that options can be settled in the collateral asset and holders can receive a simple cash payout. Yield bearing assets such as a token and C tokens can now be used as collateral in the Gamma protocol. Options created through Gamma protocol take the form of ERC20 tokens called O tokens, which can be traded on any decentralized exchange. OPYNV version 1 will stay in operation and provide a platform for users that prefer American style physically settled options. You can access OPYN version 1 here. Is it secure? It's Solidity. It's a new programming language. People are learning. Who knows? OPYN version 2, aka Gamma protocol, was audited by OpenZeppelin. Additionally, the team has been running a bug bounty program for the past 4 weeks. Additional security audits have been lined up for the next few weeks to ensure audits are up to date with the ever-changing technology landscape of DeFi, because crypto never sleeps. If your project is online, there's eyeballs on it, analyzing the code, looking for vulnerabilities, and hopefully they report them and not take advantage and destroy the currency. and the computer program and rob everyone. Here's another article on OPYN. It aims to add capital efficiency and liquidity to DeFi options market. This article was of last year on the 29th of December. OPYN, a marketplace for decentralized finance options, has rolled out new features in its updated protocol that aims to make the crypto options markets more efficient and liquid. I have tried OPYN. Basically, you buy, the asset USDC, WBTC, and you go long or short. Do you think WBTC is going to go up? Do you think it's going to go down? And you basically insure your cryptocurrency. So let's say you have $20,000 in Bitcoin and you're scared you're going to lose these $20,000. What do? Well, you hedge against it. How do you hedge? Well, now you can use OPYN, and it is pretty easy. I've used the interface. I hedged against my Bitcoin, small holdings, just to test it out. Very easy protocol. I think it's going places, but who knows? A 35,000% in 7 days. The unbelievable story of Yearn Finance, aka Wi-Fi. Yearn Finance tokens, Wi-Fi, that was intended by its own creator to have no financial value, is currently trading above 3,000 and brought a weekly return to its investors of more than 35,000%. This article was July 25th, 2020. Currently, Wi-Fi, it's trading way above that. It is like, I think last time I checked, above 20,000. Yearn Finance has zero financial value. On July 17th, Andre Cronje announced the release of Yearn Finance, the token for an existing yield aggregating platform. Now, what is an aggregating platform? Basically, the computer program takes your money and shops around for the best interest rates in order to get you the highest yield. And that is awesome. For those that are interested, I have access to the testnet from Optimism. As you can see here, you can mint, burn, or claim. I am slightly over collateralized. I provided around 7,000 in collateral, and they let me borrow around $1,000. You would think, wow, why would you lend out so much to receive so little? The returns. So the way you mint is fairly simple. You go ahead and approve your transaction. If I can ever get it to properly do what I need it to do. Here we go. So what I'm doing is I am going to stabilize the collateralization ratio. In synthetics, if you fall below 200, you get liquidated. The reason the collateralization ratio should be balanced is to maintain a balance of the SUSD. We're trying to keep the dollar stable, the synthetic dollar. So that is our job as synthetics holders. So we go ahead and approve the transaction. And normally on Ethereum, this would cost you at least a pinky toe. And we're done. We've minted my... It's very stabilized. I've already tested out withdrawals. So you can see right here, I have 2,400 synthetics waiting to be verified by the Optimism virtual machine. You have a waiting period since it is a testnet. Once it is approved, then it goes and gets sent onto the Goerli testnet. There, you're basically live. You've successfully transferred an asset from one blockchain to another. And this is quite a scaling solution. Now there is a new protocol called Barnbridge, created by the makers of synthetics. A new form of collateral arrives to diversify DeFi. And here it talks about Barnbridge, Aave, Compound. It's over on Hacker Noon. Let's go ahead and see the DeFi yields for today. Now remember, when you invest in DeFi, be prepared to lose everything. These tokens deflate very rapidly. Everyone has weak hands. They just start selling. No one holds anything. The returns are pretty tasty though. Here we're looking at a 4,000% return. Now you're thinking, what the hell is 4,000%? Basically, if you had $100 and it had 100% return, you have $200. If you had $100 and it had 1,000% return, you have $1,000. If you have $100 and it has a 4,000% return, well, now you're sitting on $4,000 from a $100 investment. That's pretty good, huh? You would think. But since they're printing what you have locked up, the tokens that you have locked actually lose value. So it's very hard to get your money back. So what you do is you have to find a good protocol, and Barnbridge does that. So you can see Barnbridge is right here. It has an APY of 17%, 7-day yield of 22.92%. It is looking mighty stable. That's what you want when you invest. You want to look for something that has obtainable APY. If something says it's going to make you a 4,000% return, you better make sure it's a good asset, it's a good protocol. If not, whatever you're putting in there, you're going to lose it. So be ready for that. Well, thank you for tuning in, and this has been a brief briefing. Take care now.